Right. How's Cleveland?
Better than Detroit, I'll tell you that.
So you saw the...
I did the artwork up there. Big up Detroit.
So you've been to Cleveland before? Mm-hmm. Multiple times? How many times?
Yeah, probably 10, 15 times over the years.
This is the longest you've ever stayed here?
Yeah.
Yeah, really?
Wow.
It was always a stop in, like, band would play, spend the night, get back on the road.
Yeah. That's kind of because you and I talked a lot about music. And
Yeah.
So you're in a band.
No, I was, not anymore.
So
Now,
you're not- so you were in a band.
Yep.
All right. What instrument did you play?
Last one, 13 years, rhythm guitar and lead singer of that project.
You got a voice on you?
I do.
Give us a little taste.
I've got pipes.
Yeah, let me hear him.
Give us a little
Let me
taste.
hear him. Let me hear him.
You know I can my hand.
Your voice smooth as Tennessee whiskey.
Oh, he's actually good.
Your heart sweet, strawberry wine.
Yeah.
Almost done. Almost done.
My voice sounds so bad. I've been sick for like 2 weeks. So you are a karaoke guy, then? You love karaoke?
Oh, I love karaoke.
I love karaoke.
Wasted opportunity.
Next time we're gonna have to do that.
I just can't. I don't have a voice. I sound like this is probably the nice baritone. I've never had it sound like this before. This is,
Yeah, it's rich. It's warm.
Yeah, normally it's not that.
It makes me want a butterscotch candy.
Seriously? You know what? It's actually the one thing about me is so annoying that I cannot sing. I want to sing so bad. I'm just not that good.
Yeah, I mean it's one of those things where I was raised around music, so I learned to sing.
I was
early.
going to say, like, did
Yeah.
you take lessons or?
No, it's
just
church stuff when I was a kid.
Develop the pipes.
So when did you realize you're a good singer?
I don't know, like maybe when I was in high school when I started playing in bands and stuff, but that was all punk rock and stuff, so I didn't really. But then you learn as you're screaming and stuff, and then keeping up that endurance. You're like, wait, I am actually conditioning something.
Because when I was a kid, I was in like choir, like in the church choir, and I
Yeah.
always sing. And I remember like being the only kid that was at. Like the one day I was the only kid there, and nobody else showed up, and I just sang, and everybody's like, "Oh, your voice is so good," and then. Now it's like, was it really bad?
Then puberty.
Maybe.
Yeah.
I mean, no, because I didn't have it until I was like 32. So yeah, I
I mean, you're almost done with it.
yes, sounds like it, right?
Yeah, I mean, you're getting there.
I'm getting there.
Get a couple more squeaks out of your voice, you'll be good.
So you joined us for our grand opening here, the new new office, the new studio, and also our Christmas party, which you get to enjoy Cleveland.
Yeah, shout out Wadsworth, Ohio.
There it
This
is.
place is killer.
This
Love
is cool.
it.
Because you big brewery guy
Yeah.
as well. So there's a brewery right next door. You guys were there. You loved it. You said
Loved
was
it. Great scene. Awesome people.
What did you
Everyone's-
think of the Christmas Story house?
Oh, I loved it. That was so much fun. That was like one of the best things I've done on a trip in a long time.
Come on. And it
That
was snow.
It was like we were in the movie.
It was snowing.
It was so cool.
It was so scripted. You're welcome. We got snow just for you.
Yeah, it was perfect.
And it was like that nice first layer of snow before it gets all shitty from the.
Exactly.
And now it's 45 degrees outside.
Yeah.
That makes sense, right? So cool. Well, yeah, so a little bit about you. We'll have an intro, obviously, to talk about you. But so CFS. So before we even get into CFS, when did you get into the, let's say, banking industry, lending industry, money industry?
Yeah, 24-ish years ago, and I came straight out of college and went into the FDIC world. That was kind of my thing that I knew I wanted to do. It's kind of, that delusion that there's stability in that portion. And, if you're not working on commission and stuff, you're, structuring around funds and stuff. And then found Alcova. Yeah, luckily we all grew up in the same town and such. So I knew the guys and, reached out when the time came to be, and it worked out.
Yeah. That's, everybody has like a cool story about when every guest we've ever had on that, and in real estate or in the mortgage world, has a cool story when they're like, this is what I'm going to do the rest of my life.
Yeah,
You have that?
Everybody hits that moment, and it depends on what it is your trigger. Like, honestly, I just didn't want to wear a suit every day. I knew that. So, like, in banking, it was always like suits, and it's like, I don't really like doing this. And you weren't really developing relationships like you thought you were. You're just a money manager. That's what you're doing. You're shifting funds around, and of course, everyone's going to be nice, but you're not really growing a true book of business as much.
So when was that moment, though, when you realized, you're like, aha?
It was like, so Alcova's been 13 years now, so about a month before that, it just hit me. I was so done with that culture. I couldn't stand it, and plus I was driving like an hour and a half to my office every day, and it was just, wasn't worth it anymore.
Wow. Yeah. So you're on the opposite side of, I feel like, the industry that we are, a little bit.
Yeah.
When you're not on paper, I guess. You're still in the lending world.
Yeah.
You're still slinging mortgages, technically.
Technically, yeah.
But it's like, I don't know, if the residential mortgage world is I don't know, a Cadillac, you're like a Maserati.
Yeah, absolutely.
That
That's
sound- I was trying
kind
to,
of
like-
that side of the industry, you know?
I was trying to give you a compliment
It's funny.
there.
It's more of like a Wild West kind of scenario over here.
absolutely a Wild
It can
West.
be a lawless land, but then, when you take what we've done, especially with the Alcova culture, we immediately knew when we started this, we had to self-regulate. And, we kind of thought, when we were talking about this, we're like, no one's ever going to say this. This is just us being super conservative. But then when I started attending conferences where you have literally, like you're saying, I mean, guys pull up in Maseratis, gold chains and stuff. There are people that listen, they can get sketchy over here. But then there are those that, preach self-regulation. That's the one way to not invite regulators in is if you just maintain this kind of business in an ethical manner, makes more sense.
Yeah. So can you describe hard money lending to somebody who has no idea what hard money lending is?
Exactly. Yeah. So this is all for growth of your personal portfolio. This is not a house you're going to live in. It's not a second home. It's not a vacation home. One way or another, you have to make money off of this. It's a capitalistic endeavor. So with that comes certain things. Number one, the need for quick cash. It's got to be ready. Like someone can say, today's Friday. They're like, this thing has to close Tuesday, or we're going to lose the deal. Okay, that's why it's hard money. It's real cash. Yeah. We can make that happen as long as people just play ball, like how our template is and our structure is. And of course, it's different because it's your rates are higher and whatnot, but it's interest only. It's definitely a higher cost of money because it costs us more to get money for this side of things. Yep. Everything is very different. That's pretty much it in a nutshell.
So not primary residence.
Nope.
It is investment properties only.
Residential property.
Exactly.
Residential.
So
no commercial?
No, we do not do anything on the commercial side, and we like to stick with the up to 4 doors. So if someone is doing like a quadplex, we see it, and if their vision works, it makes total sense. But primarily single-family residences. And, the ultimate goal is, we felt like we were reinventing the wheel, but it was like, if we can create these loans, and they're being brought to us, the majority of them from our Alcova peers or people in that space, our realtors and things of that nature, it really helps kind of pump the Alcova side of things. Because in a perfect world, CFS is going to finance this flip for this bar over here on this side of it. And hey, if they're a good friend of yours that's already flipping, the coming soon signs could be in the yard with your face on it. And all of a sudden, hey, this is the preferred lender here. And before you know it, you're getting to watch the transaction cradle to grave like 4 separate times. So it's awesome.
So it's not even for every type of investor either. So I have so many people always are like, I'm just gonna go the hard money route. They want to talk about hard money, and it's their first investment property, or it's they're looking to get into it and just start it. Is that the type of investor you're looking for?
It's hard to say because there are folks that we would love to give that first chance to. But the reality is, if you're going on sheer volume, and once again being very self-regulated, that's a little bit too much of a risk for our appetite. We're not going to want to go that route. You want to see people that aren't as green in the industry because what you find is, without fail, you guys will meet someone random and they'll be like, yeah, I've flipped like 3 houses in the last 3 years. Well, cool. How'd you do it? With my own money. That's the kind of investor you want to see because all of a sudden they know they've made profit on these homes, and they're watching themselves create inventory, but their scalability isn't there because they don't have that money in hand. Most people don't. Sure. And that's what we can turn a meager amount of money into a lot of scalability. And our model is very basic. So if you show us, let's say $100,000 in checking, savings, money market, what have you, we multiply that by 7, we're willing to expose you to 80% of that. So if you show us $100,000, you have $560,000 worth of exposure you could do. So, let's think of a town like, I don't know this, I'm not sure if the price point's right around here, but you can pick up 3 houses like it's nothing. 3 houses side by side that you're like, wait, every one of these needs a systematic flip. Okay, this is perfect. I can now buy all 3 at once and flip all 3 at once, and I'm driving my own market values pretty much.
So you threw a lot of numbers right there.
Yeah.
I understand it.
Yeah.
But can I simplify it and you tell me if I'm right? Because I'll be honest, I know very little about hard money other than it is short term. It is probably how do I say this? It's a smarter route to go when you're looking at obviously fix and flips. A lot of people are always like, "What about a home equity line of credit?" Yes, I get it. You can borrow from your equity in your house, you pay it down. You do it again after you flip and sell, whatever. But I like the hard money because, let's say $100,000 house, minimum down payment is 20%.
Yeah, at 15, 20%.
20%. So let's just say 20%. So we have an $80,000 loan. And I come up to you and I say, hey, I need $60,000 to do the repairs. you will loan the $60,000.
So we'll structure the amount for the acquisition and the renovation because that's how we, you have to determine valuation on the property.
Sure.
Whether
What
it be
after renovation.
Yeah, we have to have an as-is with a subject to, and it doesn't even all the time have to be a full-blown appraisal, because once we have folks that we're doing so many deals for, because, we're very lucky that we have picked up a lot of great clients that are doing 40 and 50 homes a year. Well, the rules kind of start to shift away a little bit on that because, if we can pull a quick desktop valuation on it, shows value, let's go ahead and do it. Yeah. But if it's someone that, we're trying to build that relationship up or we feel that, hey, the scope of work is a little robust, it's over 75K or whatever, we're going to do that full-blown appraisal, but we're going to make sure it's quick because we're not using the same traditional AMCs as you would in the conventional world where it's systematic. We can tell these people, hey, you've got to get an appraiser out there within 24 hours. It has to be done because the deal has to happen by Wednesday of next week. Right.
As far as like the appraiser goes and all the work that is done, it's like I know because we still remember horror stories of 203K loans.
Oh yeah.
And so as far as like the repairs need done, things like that, like can an investor do it themselves? Does it have to be like a certified contractor that does them?
We have so many folks that just do it themselves because realistically, if you're making money on this side of the industry, you're not doing complete teardowns or things that. Definitely some things. I mean, you're not going to do your own roofing or redo the entire plumbing system in a house, but most of this is a cosmetic facelift. And as you guys know, that really changes everything. I mean, the number of people that we literally just do flips with that are only trying to make FHA eligible properties is fascinating. I mean, it's tons of folks that do that. And that's why our model is so dynamic because we also treat the rural markets just like we do urban and suburban markets.
Which is a problem we would run into out here.
Exactly.
A lot, and that's why, yeah.
Well, because, the model says if you're going by the letter of how everyone else acts in our space, if they see that it is truly rural, whether that be through the CFPB or on an appraisal, immediately other companies are going to say, yeah, we'll give you 60% loan to value. Yeah. Well, that's fine if you have a lot of working cash, but at the same time, the reason we shifted away from that model is we know these houses are going to get financed on the backside. We have plenty of professionals within Alcova that know they can get a heck of a loan on this property, and the new buyer is going to be super happy. So why wouldn't we give this front side client the ability to not deplete their funds, keep their cash on hand, and it's a smarter way to do it, I think.
So with the hard money, is it more can individuals do it as well as like an LLC, their own LLC, or how does that work?
So on our side, it has to be an entity. Okay. So if the three of us were going to do a flip together, we wouldn't put it in our respective names. We'd create a new LLC, and we're all members.
Has to be an entity.
Yeah, it has to be an entity. LLC, S corp, C corp, whatever you all have set up is what we work with. And that's just for our protection. In a terrible situation, if we have to go into foreclosure, it's much faster to foreclose on a property that's owned by an entity. And then for your protection, it's not going to destroy your personal credit down the line it would.
But you can create the entity really, relatively quickly, correct?
It
doesn't have to be established for like 2 years.
We have people that make a new entity, even if it's a normal flipper that does, let's say 10, 15 houses, they'll change entities per house. It'll be like 123 Fake Street LLC. It's something like that. Just to, it's whatever their CPA advises.
Yeah.
Okay. And so again, I'm sorry, so many questions because I want to do this.
He's a landlord. He has investment property.
So the LLC, the entity that's established as far as like the bank accounts that you associate with, can those be individual? Do the bank accounts and the funds have to be a part of the LLC?
No, we can source that from the personal side of accounts. Okay. So once again, it's a three-piece model. If I have X amount over here in personal name, but I also have a business account that I want to show, it's all about showing whatever liquidity you want to, i.e., grow your exposure limit, or B, cover the deal. We're not going into the whole digging through everything, drawing blood, being like, hey, we got to source this and source that. If you have the money and it's sitting in an account, just show us. We're not looking at W-2s and tax returns and all that jazz. This is banks. It's almost like the glorified bank statement lending. Yeah.
So two paths I'm thinking of now. If like you flipper, you find a property you can get for cheap, you do the repair loan and then sell it, profit. Yep. Great. For the investment property, then if instead of selling it, I rent it out to that point then too. How's the loan structure look then in terms of that long-term investment property?
That's actually the part of the model that I really like, and this is where the Alcova side comes back in and can help with this. So our model is 6, 9, or 12 months, preferably 12. We always tell folks, just do the 12 months because we don't charge prepayment penalties and stuff, but have time to get out of this loan to transition however you're going to. So to your point where you're saying, if you're a landlord and you're like, wait, I can buy this completely finished house for $190,000, and this is what it's going to rent at. But let's say a block down, there's a house that you can get for $60,000 that needs $30,000 in reno. It's not been rent stabilized. You're looking at the numbers on the appraisal. Get that at a bargain for that point, and then do a DSCR takeout on the backside. Do that, pay off that route, so you all of a sudden have something that looks better on the rent roll. It's stabilized. You're creating a better community for the rental market. So that's what I love to see happen.
I just think so many people don't understand the, I guess, flexibility. Like, you're not getting this loan, a hard money loan, as a long-term. Like, people look at it like, well, first of all, they balk at like the rate, or they balk at the idea, like 12 months after. Yes, this is using somebody else's money to then make money for yourself. And like every single rich person in the world uses, I would say every wealthy person in the world uses other people's money.
Exactly.
To don't touch my assets, don't touch any money. And as simple as, using your credit card every month and paying it off at the end, you're not using your money to transact, you're using somebody else's.
Right.
Same thing applies here. And so I would assume that most of like your clientele, they're like, hey, it makes sense. It's more of like a relationship driven, because they're trusting you to make a good financial decision for them on an asset they're trying to acquire.
Absolutely.
Not, I'm going to you, I need a loan, I need the money.
Right.
And that's where I think so many people get like, not the wrong idea or the wrong mindset going into it, because they're looking at it like a traditional mortgage, and I'm trying to buy this thing and I need your money to buy this thing.
Well, and that's excellent. All those points are exactly what we think about daily. And when we started this, the most fascinating part of it was, it was so foreign to me. There are still days that there's something new I learned on this side of the industry. I'm like, holy cow, I've never even thought of this as a real thing. It's always just kind of ever changing. But showing people that their liquidity can grow, and it not being a sales pitch, because that's the great part about this side of the industry. And I know that this is like music to like LO and BP's ears, where it's like, we don't have to quite grind as hard, because it's here and it's available. If you fit into the box, it works. There are some exceptions made from time to time, but that's because it's an exception-based business, But my ultimate goal is to say, let's say there's someone in their late 20s, early 30s, and they've been doing well. They've done 3 or 4 flips on their own. And I say, hey, show me your bank statements. And the first time they show them to me, they've got, let's say, $35,000 in an account. And you're like, that's really good. That's awesome. You've got that in there. And they're like, well, I'm going to use this to do this portion. We're like, no, don't do that. Let's go ahead and see what you qualify for here. And let's look at your holding cost of what this is going to cost you in the long run, your utilities, the insurance you've got to carry on the property when you're doing it, and what that monthly payment's going to be. And ultimately decide, how long do I want to take on this flip? Obviously the old adage, time is money, makes way more sense. Yeah. But, if you can be in and out of the contract work within 60 days to 90 days, time on market's not going to be as long. Obviously you can get this moving. But when they come back to us for the next loan and we requalify their statements like 3 months later, and it's like, oh man, that's sick. They have $75,000 in their account and they're not even touching it. I'm like, our ops team will review and they'll just say, oh man, look, they're doing their normal transactional business in this account, but the money is there. It's growing. We're seeing this. And then we have people who tell us, they're like, we really appreciate you all changed our complete mentality on how this works. You grew our book of business in a way we never thought possible. And I think that's where the Alcoa mentality comes to the creative financing solution side, because I'll never forget when the guys tasked me with, us figuring this out to make this work. I was like, all right, guys, I'm smarter than you guys at this right now. I went to one conference, and they keep telling me, they keep saying, this is not a personal business. It's not personal. And all the guys were like, what's going to have to be over here? And I remember being like, well, these folks are just churning out 30, 40 loans a day, and it's not personal. They enter an app on the screen, you either get approved or declined, move on. Yeah. But what we've seen is, as we're scaling this own business model, with making those personal relationships, it's really cool. Like, you get to meet people on a much different level on this side than you would with what you guys are doing. I'm sure that you guys have those same feel-good stories where you're just like, they were, fresh out of a divorce. They wanted to buy a home for their kids and things of that nature. They have a place that they can now see their kids raised, and then their grandkids are going to come back there. It's going to be an awesome thing for the rest of their lives. We're just doing the front side portion of that. These aren't dream homes that our clients are making, but they're someone else's dream home.
Yeah, oh, yeah.
So
True.
If we treat those contractors and builders and all of our partners with that same level of respect as you would on the conventional side, it's such a full circle moment. Yeah. It's really cool.
It's, like, want to go back on one second you said. So it's your clients are looking at, you're helping them achieve their goals and dreams.
Exactly.
Completely similar to what we're doing, right? Somebody's coming to us and they're looking at purchasing a home. Yes, it's an asset. And I've done so many podcasts, I've done so many reels, I've done so many standing in front of a bunch of people talking about like, we're actually helping you generate net worth. Your net worth. Every single millionaire on the face of the planet has some sort of their net worth or a bulk of their net worth in real estate.
Yeah.
And everybody's like, well, I don't have any net worth in real estate. Well, yeah, you do. You own your home.
Yeah.
And it's the only asset that it keeps appreciating, other than the 5 years since 1941 where they haven't.
Right.
But it keeps appreciating as you're paying it down. So what's cool is that you're able to, that your entire product is helping people create a portfolio. And once you're done with the first one and then they come back for that second one, it's almost like you guys are not selling loans. You're not selling money.
No.
You're literally selling how I can grow your net worth. You're almost like a financial advisor.
Exactly. And
You almost are.
It's funny because the number of clients that will then start asking for that, tax advice and things of that nature. And then you have to do this famous thing. We've all said, listen, I'm not a tax advisor.
Not a CPA.
I'm going to have you call someone else and ask them this. But it's cool that they entrust you with that.
Right.
They're asking those questions. That means they're engaged, and that's awesome.
Yeah, and we get that too. I talk about like how I brand myself the bearded banker because I want people. And we don't have checking accounts. We don't have credit cards, but I like when people reach out to me for that stuff because I can then point them in the right direction, or that means my branding is working as well.
Yeah, of course.
No, that's cool. So if I could, or if you could say like, I don't want your elevator pitch, but what sets you apart from your competition? Because in Northeast Ohio, you and I were talking about this, we are so saturated with hard money lenders, right? I'm sure in your guys' market you are as well.
They're everywhere.
So what, other than you are what sets it apart. No, what, with that beautiful voice of yours.
This rich, buttery tone. I'm going to can that up and sell it.
Some of those pipes are just so great. As soon as you're going to leave your room, like, oh, those pipes were so great. We'll have to cut that out too. But anyway, so what is the what sets you apart from the rest?
I think it's the fact that we are also learning as this company continues to grow. So I don't know if we'll ever get to a point with this where we feel like we're the masters of our own destiny. And normally that would be one of those things where you're like, well, that sounds like a problem. It really isn't. You have to listen. That's the crazy part about what these people expect and what experiences they had from other lenders. And then it goes back to where Bobby, Billy, and Rob and I had that conversation like, no, you're going to make it personal. Yeah. Like, for instance, our first big client we have is now one of my closest friends, in the world. I asked him, I said, why did you come from we'll not share names of other companies, but this big company on the West Coast, they were flying him out like multiple times a year to go courtside the Lakers games, all this stuff, Yeah. He goes, my reps started to become a call center. I couldn't reach out to them directly. I could not shoot a text and ask them a rando question, something dumb, whatever. They all became very clock driven. And it goes back to what we were just talking about. The personalization is what sets us apart. And we care about it because, the reason I was popping pictures when we got here the other day of the outside of this, these are towns like where we came from. The guys, when they founded Alcova, this looks just like the area we're from. And we care about these communities. It's not a sales pitch at all. We want to see these communities restored to what they were when we were kids. And, so that our kids' kids can do these same things down the road where it's like, these communities are awesome. Yeah. Bring them back. And you can't recreate that feeling. You can't go to someone and say, I want a craftsman-style home from the 40s. You can hire an awesome contractor, and they're going to charge you over $1 million for it, but it's not going to have the character as a house that was built in 44 that has its own stories. And now all of a sudden you're helping just enrich that story. It's really cool.
So, and you guys are like, I almost call it like the Property Brothers loan. Right?
Yeah.
Everybody loved that show. Everybody loves
absolutely.
HGTV. And that's what you guys are doing. You guys are going in and you're helping people create basically the Property Brothers.
When it's funny because, you'll look back on those HGTV shows like that, Chip and Joanna and all that jazz. And number one, they have to have mountains of cash to do what they're doing.
Well, yeah, absolutely.
And it's, definitely staged. But the reality is there are so many people just like those folks that just aren't over the top or, trying to get their image out there more. They just want to make a really quality product. And they want to put homes on the market, create inventory. It's all very cyclical. Yeah. And I think, backpedaling, the one thing that is different about us, we take the Alcova mentality of building relationships around us. Just like I told you guys, next time I come up, let's spend all the time we can with your realtor partners. And there's going to be a reason, because we're going to sit there and talk, and you're going to introduce me to John, Jane Doe, whatever, and without fail, they're going to be like, well, I've got 3 people that do this. But they already have a hard money guy. That's what we always hear. And I'm like, cool, tell me about it. Generally, I want to know what they're like. Well, it's these 3 guys or guys and ladies that own their own private fund. They have a couple $1,000,000 and they put it to work. That's awesome. So why are you still talking about them then? They're like, well, they run out of money. Well, obviously they do. I mean, these smaller funds, it's kind of hard to do that. We can go for that larger scale and keep growing on it. And I have no problem. We're not going to sit out there and poach business or anything like that. If they have a hard money person in town, great. But when they're tapped out, come to us and let's keep your book of business rolling until they get some payoffs in. Yeah. And we'll gladly say, hey, yeah, pop on back on the other ones. You never bite the hand that feeds you.
Yeah. Is there a time that you guys are like all loaned out and you're waiting for money to come back in? Or is there auditor? Is there any sort of like regulation or auditing?
There is not true regulation. However, our model is different because, there is private money that we have, fund that, the guys have been working to grow as we've been doing this, so that people buy in. But then we also have the blessing of having warehouse banks behind us, which that's the difference. Like if the 3 of us sat down and we could figure out a way to pull together $1,000,000, that's great.
Right.
But that's only going to work for maybe 2-3 clients.
And you're sitting
and let's hope, let's cycle it back in. We're very lucky to not have that issue. We can keep that scalability moving. And that's been the most fascinating part of this is watching warehouse banks that, we've worked with forever, people that we've known for 25 plus years that are all just like us, Southern, everything has to be regulated, straightforward. And then all of a sudden they're like, this is nuts, but I'll try it. And before you know it, they're like, well, this is actually kind of neat. Instead of the normal TPO model where, Alcova funds a loan, it sits on the warehouse line for a max of 30 days, and it is sold to an investor, paid back. Well, they're seeing this month-over-month yield and return on these, and it's not quite as nuts as you think. And they're also seeing that the books always stay clean. They're always paid off. We have one of the lowest default rates of any company that's in our industry, and it's because, going back to, we know everybody that's doing this. And the other cool thing is, this is going to be crazy because I'm a regulation-driven person. I love all of that stuff on the mortgage side of things.
What?
But, there are certain things because I believe in you have to be fair, ECOA, redlining, all that stuff.
I get that. Yeah, 100% on that.
But the one crazy thing I can say is we can cherry pick over here. And I don't mean we're going to go just seek out certain neighborhoods, but let's, if we just get a weird feeling,
if we don't like it,
we don't like it, we don't have to do it.
It's your money.
Exactly. And that's what's cool about it is you can just say, listen, I just don't like it. Right. And it's not that there's one glowing red light in my face or Amelia's face where we're looking and analyzing a deal. It'll just be just enough hair on the deal that we're I don't know, man. I don't think this is going to work in 12 months.
Right, and you're allowed to say that because it's not primary residence.
Exactly.
It's your money. It's not a primary residence. It's just the same as a financial advisor saying no.
Exactly.
Or I'm not going to do this. Or,
I just texted my agent, who I primarily work with on his investments, and he does not have a hard money guy.
Well, then,
there you
we'll
go.
have to set up a group here in a minute. Look at this.
What a kiss ass, dude.
And this is how easy you can have business happen.
Wow.
Hey, can you guys go ahead and pull up the upside down ice cream cone? It's not a pyramid.
It's a funnel.
Some people still know how business is done. Yeah. You like The Office? We talk about? Yeah, we like The Office. Yeah, we did.
It's pretty much my whole life.
Yeah,
I mean,
yeah.
And the craziest part is anyone that's worked in the financial side of things, FDIC, TPO, I don't care. If you do not feel at least 3 times a day that your life is like The Office, you're not in the right industry.
Oh my God. Yeah, I used to work in this insurance company. It was real big, and it was if kind of the characters weren't there, but it was how everybody's just dead on the inside,
right?
Walking around, just that's it. I don't miss those days.
No, not at all.
Yeah,
at all. No.
That's the other thing is liking waking up and doing what you're doing.
Oh, isn't that a blessing?
It's awesome.
Yeah, it's great. And that's when it changes. Obviously, it's not a job at that point when you're passionate about what you do.
Yeah.
That was the biggest thing. This has nothing to do with hard money, but everybody's always it must be nice to, you could just come and go as you please. And I'm like, well, yeah, I have 365 vacation days, but I also am working 365 days.
Yeah.
Right? So it's, you can't get in this industry. I remember people after COVID, all these companies were like, oh, you have unlimited vacation, right? We had somebody that used to work with us and then they quit and they're like, yeah, I have unlimited vacation days. I'm like, no, you don't. You still have to work. You have to get your job done. And then they got fired. But because they were taking too many vacation days. So it's, we'll get out of here in a couple minutes here. What's the day like for you guys? Like, what is because our day is, it's 30-day process, right?
Exactly.
And it's more than that, actually, because you
Yeah.
go from lead to pre-approval to,
Yep.
running numbers to then contract, and you're 30 to 45 days after that. So it's way shorter for you guys.
Exactly. So for us, and this is the one thing I love, this is a Monday through Friday business. And it's because it's business.
Yeah.
No one's going to do a business contract on a Sunday. Anytime a client will text me on the weekend, which I have plenty that I'm so close with, none of them ever text me about like, hey, I need a pre-approval letter like now. I'm like, because people that are in this industry, they know you don't need something on a weekend.
Yeah.
It is what it is. But our days are like just analyzing what's coming in. Like I said, we have this wealth of referrals from the Alcova side, and then these realtor partners that we started to make friends with. And then we have done a great job of our reputation is starting to precede us a little bit for getting the deals done effectively and taking care of people. Yeah. So we constantly have even our own flippers. I mean, what you would consider competition in their own town, they're sending the guy across, the street who's also flipping in the same community to us.
Oh, okay.
And that's really cool. So it's just always combing through the deals. Like I said, it's more about trying to find the deals that don't fit than the deals that do fit, because realistically they shake out a lot easier once you do that. And that's where that lack of regulation really, you've got to be disciplined about it, because obviously in my head it's like, man, let's do 10 loans a day. Let's just do them. Let's just say, boom, boom, boom.
Why not? Slinging it.
Because I've met so many people in this industry that do that, but they also don't have to care about the fact that if it goes into loss mit or default, I'm also the guy that, I'm going to be calling about these foreclosures. We're working directly with the attorneys. This is our money. We have to get it back, and this house has to move immediately, and we have to make decisions on a dime.
Yeah.
So that's it. It's just pretty much being proactive. And that's the crazy part. I think we finally reached a point where we're reaching proactivity, because when you start something new, and this is still back to the old days when I was with Alcova, it's like, oh, wow, wait, we never knew this. Hold on, we got to react to this. We can't, we didn't see this coming. It was much different over here. We really didn't know everything about this. The guys had a wonderful business sense of how this would work, and it was logical, but there was still a huge fear that this wasn't going to, I'm like, oh my gosh, I'm taking off my Alcova hat, and that NMLS ID is going away. I was like, well, this is kind of scary,
Yeah.
But it's so much more fun, in my opinion. I really enjoy this because I'm still a nerd about it, where let's say there's a flip that's going on that's an hour away from me and we just happen to be driving by. I want to go see it. I want to, because I remember what it looked like before, and I'm like, this is sick, Or if we're in Florida, I'll remember addresses, or like through the Carolinas and whatnot. It's just so cool to see that happen. And you guys will see that once we start doing stuff around here. You'll be like, oh man, I remember that. That was a piece of crap.
Yeah.
But now, look, they have the Midwest white picket fence. Kids are out playing in the yard. I mean,
Before and after.
exactly.
Yeah. I feel like that would be that's got to be like the biggest sales pitch for you guys.
Yeah, the before and afters.
Right?
Yeah.
Gotta
Well,
look awesome.
and you're watching neighborhoods, like I said, that have fallen in disrepair. It's not that they're bad areas. It's just, industry changes, people move, things
what it
go
is.
on. Is what it is.
It's Cleveland, Ohio.
Yeah, that's it.
Hey, watch it.
Hey, it's
We
Detroit.
can say
Not
that.
Detroit.
We
We're
can
allowed to say it.
we can make those jokes.
Yeah. But, when you see those neighborhoods that maybe you don't remember, but your parents remember being like awesome, well, that's cool to see that happen again. It's a whole different life.
Yeah.
And that's our big mission there.
Yeah. It's no, it's cool. I don't say it's more fun. That hurt my feelings.
I mean, you guys,
No
you
matter
guys
what
have
you
a
say.
systematic amount of
Yeah,
fun.
yeah.
I mean,
It's somebody's like, yeah, is your job fun? I'm like, it's awesome.
yes.
It's the highest of highs. You get the lowest of lows, right? You're helping people. I always say, like, my little grandma statement is like, I help people achieve their dreams, and then they help me achieve mine, right?
Yes.
So you're helping somebody with their biggest financial transaction of their life. It's so emotional.
Yes.
On your side, not so emotional.
And it's weird. It's not even that it's more fun, but it's just more, it's like a nerdy environment. Like, it's almost like strategizing and making
You get to
moves
talk-
that,
yeah,
that are so good for not only your investor, but
dweebs.
the market. And then all of a
play
sudden, you hear all this stuff, and then you also know that, we're making money. This is a capitalistic endeavor. So we want to see what we're doing, and watching that happen year over year has been just so cool.
Yeah.
And you want that growth to continue. But that's where we always kind of throttle ourselves just a little bit. We're like, hold on, we can definitely, it's not easy, but we could definitely turn this into one of those churn and burn companies based on reputation and doing the right thing for people. But we just don't want to.
Yeah.
Like, I love the conversations I have with people when it comes to the investment side, because like you're saying, where it's so emotional on, you all aside, and I remember all those days so well. It's emotional in a very different way here. It's more of like, dude, I'm going to lose this deal if it's not done within 36 hours. And it's like, all right, hold on. Now we got to go into this work mode. And also making sure that we're doing the right deal. We don't want to be rushed into a scenario where it's like, oh, wait a second. We should have seen this coming. That's happened, as the company grew. We have learned our lessons. We've taken our lumps. And that's where it's like you start to feel like you're a little bit more in control of it. It's just like, all right, let's move this chess piece here. And that's more of why I say it's so fun.
All I'm sitting here thinking is just a bunch of like dweebs in a room. You guys are like all nerds.
Yeah, if we all had if we were all in one room, it would be a nerdery.
You've had that one planned.
Yeah, like the movie Willow would be playing behind us.
Willow of all the movies.
You're such a hipster, dude.
Or like everyone's wearing Thundercats t-shirts.
Well, it's cool. Real quick before we get out of here, so 30 seconds. Who is if you could say it to anybody to like kind of sell hard money, what you're here, like give you a call for this reason, what would it be?
If anyone wants to flip, or if you're a realtor that has clients that talk about this, or people are doing it, and yourselves, perfect example, realtors, listen to those context clues. When people are like, yeah, I flipped a couple of houses. I wish I could do more of this. There's guaranteed at least once a week you hear somebody be like, this is what I'd love to do full time. Yeah. I hear that so often. And I'm like, what's stopping you? Especially because, you guys are probably the same here as we are on the East Coast, where there might be a contractor that's been doing this for 30 years, flips, but he's doing it for someone else. And on the side, he might have done a couple on his own. Husband and wife teams, that's a big thing for us. And then all of a sudden they're like, well, wait, if one of us is going to continue working in the W-2 world, but we can grow our personal wealth every year with your working knowledge, why would you not use something like CFS for that? So it's just more of my target audience is whoever is receptive to this and whoever has the best communication levels. And that's why this model does work, in my opinion, is because we have set the expectations very early that this does have to have that Alcova experience. And at first, like when we said that, it became kind of cheesy. But then it's like, no, it's not cheesy. We're, instead of, Alcova showing you the way home, we're showing you a better way to invest. And we're showing you a better way to grow your personal wealth. We're showing you a better way of just having people to work with and say, listen, situations arise in these flips. And we don't want you to feel like a number. Let's say this thing's getting to like month 10 and there was, something crazy like a septic fell in the middle of the winter and they can't get out to March to, get through the frozen ground to do this. I would rather work with someone and make the deal continue on than ever have to go to that darker side and be like, hey, we got our attorney involved. We definitely have had to before, but it's slim because you'll find that a lot of these folks almost have PTSD from previous lenders doing what we do, or like you're talking about the local hometown people. That's where it can get a little harder because it's not that they're doing any of these loan sharky things. It's very straightforward, but if you know that you need money to come back to you to keep your fund going, you're going to get a lot more aggressive quickly. Yeah. And I think that the one thing that we've always said is we don't want to be in asset management. And who knows, maybe that'll change in 10 years, but it's not our forte. We don't want to be in that portion. So we're not going to go every way possible to get someone to finish a house up to 95% and then pull the rug out from under them, which is very common in this industry because I've got a flip that's almost done. I've taken it back from you. And now I'm going to finish it out and we're going to make money on the asset management side. There's a time and a place for that, and it works for some people. But when we only lend in the communities which Alcova serves. So I have an inherent responsibility, and so does my team, that if you entrust me to talk to your top realtor partners and things of that nature, I have to treat it like I'm sitting right here in your office. Yeah. I would never, because the last thing I want to do is tick them off or seem like I'm taking advantage of their client because you're going to hear about it and then it's going to affect your book of business. Because that's the goal, is we want to see those referrals coming in droves, quality referrals. Yeah. And they're not all winners, but I mean, you have to look through those to get to those solid piles of gold.
So definitely. I know time moves slower in the South, but that was the longest 30 seconds.
I know. Well, I had to make sure to cover all of it.
I love every time we've had so many people on from Alcova, and
yeah.
You guys just love to talk. It's so different from us. We're like, all right, that's enough.
Whenever. I feel like because all the podcasts that we record with, it's coming from a conventional space for the most part. So I always feel like you have to do this in-depth explanation. And I'm like, listen, Sit down, Peppy. I got you covered here, buddy.
I got this here. Well,
Hey, why don't you go to the restroom? I'll go ahead and finish this off.
produce it? Yeah, I'll be here tomorrow.
Yeah.
Yeah. No, thanks so much for joining us.
Yeah.
Thank you guys.
Yeah,
So exciting.
we want to have you on, in the future as well. Like, kind of have you check in and talk, because this is a tool that people don't know exists. And the reason, like you were saying, people are like, "Well, why aren't you doing it?" Well, because they don't know that they can.
No. Yeah.
Right. And then, realistically, you said 15% down. Even if you do the 20% down, on it, you're buying a house that's $100,000. All you're needing is that initial $15,000 to $20,000,
and that's all you're out for that
And
short
that's it,
term.
with
I was
the
gonna ask, too,
renovations,
closing
and-
costs?
Yeah.
So that's the other thing that, and this could go in a long-winded explanation, but obviously I know we have the time here. Ours are much lower. We did that intentionally because when you look at some of these folks that are running very successful companies, much larger than ours, and we're talking billion-dollar companies, interest rates in the 16s and stuff, they'll do it because they can. The origination points. Okay, well, we're going to say it should have been 2 points, but we're going to charge you 6 because I got a broker involved that wants to make their cut and then blah, blah, blah. Sure. We never wanted to do that. So the junk fees and stuff, so ours is going to be a 2-point origination and then just our normal underwriting fee. Keep it straightforward. We don't have prepayment penalties. That's a big thing in this industry.
That's a big, yeah.
We skip it. We're like, I would rather you come in here and get this thing done in 45 days. All you're going to get from me is a congratulations, let's do the next one.
Yeah.
Let's keep rolling.
Love it.
Yeah.
Thank you.
There you
Once
go.
again,
Thanks,
yeah.
guys.
Before you get out of here, before you go, one band, you can only listen to one band the rest of your life. Who's it going to be? And why is it Dave Matthews Band? Yeah, dude, I knew it was going to be Dave Matthews Band.
And it's Pearl Jam.
Is it Pearl Jam?
It's 100% Pearl Jam.
Cool. Yeah.
If
Pearl
I
Jam?
have,
Pearl Jam?
that's the one group that has always done it for me. I've been to over 100 shows
Wow.
over the
Jam.
years, and watching their evolution. Like Mike and I were discussing, it's when people become jam bands, it's really cool.
Pearl Jam. Did not expect that one. It's a good one.
Yeah,
It's a good one.
we'll live long enough to become a jam band.
There you go. All right, Chris. Thanks, man.
All right, thanks, guys.
Mr. Lemmons.
Mr. Lemmons.